Hey, what's going on, guys? It's Will, and I'm here with Shino.
What's up, guys?
And we're here. We took a moment. He was coming because he's helping wrap our GTS, the Toyota. And he was like, hey, I got some questions because he's a stockmate as well. He's like, I got some questions about some things about trading strategy. And I was like, all right, let's go sit down. And so we came into this apartment that we're remodeling right now. I just came in, and now he's showing me the setup here with TradingView, and he's gonna walk me through some strategy. So I just was like, hey, what if I film this so you guys can have another perspective on what it's like? So he pulled up the Ethereum chart here.
Yeah, so it looks like Ethereum doesn't really want to pass through. I mean, I guess so far, if we're gonna get technical, the 4,800 range, right? But for the most part, for the past 2 years after that, it's only touched about 4,000, and then comes crashing down. So since that's the case, I decided I was like, okay, well, let's see if I can take an opportunity just to do a hold, a basic hold of coins.
And you're bullish on it.
Yeah, I was trying to see if I can make a good old decent trade. So my basic, and I mean very basic strategy was, find the highest point and lowest point. So if that's been the case, I marked that over here.
So you're looking at the support and the resistance.
Yeah, so before this even happened, I was down here at this zone, and I jumped in, and I was waiting for it to come crashing a bit down more. And my confirmation, very simple, was I was waiting for it to break this candle layer right here. So I wanted to break, or pretty much jump into it around 1800.
Got it. So break out of this downtrend right here.
Bingo.
So there's like this very consistent downtrend.
Right.
Got it.
And then my goal was, I was trying to decide how much, I don't want to over greed or anything. So my rule of thumb recently has been just do 3/1 for a trade.
Can you show like this downtrend? Can you mark it up real quick?
Yeah.
So like basically Ethereum since like January or something was on this very consistent downtrend, like getting rejected. And there's this lowering resistance and lowering support. And she knows, like, I'm looking for a breakout of that trend. Does that sound right? Was that what you're kind of looking for? Okay.
Pretty much. And I was like, okay, this was kind of like, after seeing it happen so many times, this was obvious for me. So like, this is common sense.
So then you're saying you put together a plan for it?
Yeah. So my goal was I wanted to do one coin for holding, and then one coin for buying in at the dips on the process of the way. So let's just show everybody real quick.
Well, they can see the screen, but
yeah, they can see it. That's right.
That's right.
So in short, so for the dips, so long term, if you think of the long term, the goal is to jump out around 3,400, and if you really want to push your luck, 4,000. I tend to just play it safe. That's how I've been trying to do it to make this make sense. Because to be a consistent trader, I feel like that's what you're gonna have to do. So now that's the case. So once they push you into, I don't think I'll let you get out of this, can they? They're gonna want you to buy it, huh?
Well, you can't get in the trading view? Okay.
Let me see if I can. Can I just log in? Is that cool?
Yeah, I think it should work, yeah.
Okay. You can log into one of your
That
eyes?
one's, yeah, Tamara Rodriguez.
Okay. Should let me continue, hopefully.
She signed up.
Alright, okay, there we go. Okay, so long-term wise, this is the long-term trade. Now I'm gonna get rid of this for a second so we can see the other part I'm looking at.
Did you enter there, or?
This, yeah, 1,800 is what I jumped into for one coin. I just held it. So that's what's saying I'm up profit like drastically right now, which is
nice. So you bought it 1,800, and what's it at right now?
Right now, what's that? 2,500 or six. What is it now? It's like, I think an 800 turnaround. Maybe?
Yeah.
Out there. Double check real quick. Yeah, $700 turnaround.
$700.
Yeah,
nice.
Not too bad. So now, what I've been doing too is jumping into the 4-hour time frame. Look at the little opportunity dips I call these. It's very simple. For other type of trading, targeting some extra couple bucks, right? And it's just how I've been doing my strategy. Is I look for a low spot and then a high spot. Excuse my grammar, by the way. Everyone calls it different things.
Yeah. Okay. So support and resistance.
Right. Support and resistance. I have so many different terms for this. It's whatever.
No, I like it.
My brains.
Like that price level, that zone. Right. Yeah, got you.
So all I've been doing over and over again has been it's been very simple. Is I wait for everything to react on these lines, and I'll literally just buy in and then sell. So buy in here, wait for that, they touch that line.
So
sell.
Are you doing that like 2 to 1, like risk, or you?
I'd shoot for about 2 to 1 to if I can get a 3, like that would could have been almost a 2.5 to a 3.
Interesting.
So long term, it's about a 3 to 1 if you're looking at that candle. But from this one, if I get deeper into it, that's gonna go into the 1 hour time frame, or even 15, 35, or 30-minute time frame.
What is the reason behind the 2 to 1? Like, why do you do 2 to 1 risk?
I was more testing it at first. Doesn't always work. I noticed. Let me see if I can find it.
Kind of like testing it, because I'm curious what it was. Like, what made you move that way? Because I usually do 1 to 5.
1 to 5.
Yeah, I'll look for profit that is 5 times that of where the percentage at which I would cut my losses.
For crypto, I noticed so far it's
so volatile.
It's very volatile.
So it can hit your stops easier.
It's very scary in this area. It's a bit more riskier, I noticed.
I could see that. I think with stocks,
on average,
there's more of this cyclical flow of pattern, especially when you have the London, and then you have the sessions when the market opens and it sells down.
Yeah.
And if there's it's pretty easy to look at accumulation, distribution, or manipulation in the stock market.
Mm-hmm.
In crypto, it's
it's a different monster.
It's 24 hours.
And it's a different monster. Anything can happen at any moment.
With stocks, institutions usually schedule their buy and sell orders at market open or towards market close.
Right.
But when you don't have close and it's more sporadic with crypto.
Crypto's very just impulsive, random.
I feel like that's why most stock traders don't like crypto.
Yeah.
Because I like crypto personally, but
yeah.
I feel like most stock traders are I always lose with crypto or whatever. It's because maybe that's why they have that cyclical, more close 100%. Stop, and they always get hit or things like that.
That's why I was also telling them earlier what I decided to do to play it safe, because I feel like it's a more valid way of just trading at this point. It's better to do holds of the coin. If you're gonna do trades, if you're really gonna do actual in-depth trading, I'd say the safest way, safety wise, is zone trading. So between a resistance and support, and that's it. If you're trying to do anything else, it's very hard. Even here, for example, this strategy, like I said, it doesn't always work because look how far this came
from a
down.
technical perspective.
Yeah.
You could play news, you could play fundamentals, earnings, but definitely from people trying to overcomplicate with crazy patterns. People tell me did you see the reverse bull trap that was hovering just below the EMA, which indicates a golden dome, and I'm like, what even?
I tried it in the beginning with Forex. It didn't make any sense. I noticed that's been working the most. Has just been zone trading, at least for crypto anyway.
For most institutions, they look at support and resistance.
Exactly.
So it's why would you look at things that most institutions aren't even looking at?
Everything else is. Yeah, copy smart money. Simple as that.
Right.
Copy smart
money. So that's been the strategy with Ethereum, and you're saying something wasn't working.
The part that wasn't, I guess I can't say it wasn't working. There's more of inconsistency of. Well, I also feel this is all trading. I'm not always gonna make a win here because sometimes, as you can see right here, it pushed out of the zone briefly, and depending on where I put my stop loss, that could have been enough just to keep me out that move, and then it would go up. No matter what, I knew the position was gonna go up and whatnot. But I've had times to where instead of it going like this smoothly, it would come down here and kick it out and then go up there. So the trading style isn't perfect. I feel like it can be consistent for a day trader, but if you're doing swing trading, I feel like you're taking too much time on this type of style. So my plan was...
Yeah, you have to be more lenient. Like you said, 2 to 1, or even not even set a stop loss if you're going for those couple month-long trades or things like that.
Pretty much.
And just basically watch market sentiment.
Right. And then with this one, for short term, I noticed you can sometimes use fair value gaps a little bit. I usually I tend to use them more on gold. Gold seems to be a bit more proficient.
So how do you do the fair value gaps?
Yeah, let me see if I can find a decent example.
Because I know people really follow fair value gaps. I haven't, Well, I do
It's-
on a longer time frame of like, I guess I don't know if it's always as clear with crypto because they don't report like earning or like their financials as much. It's like you got to look at the usage and stuff. But like with stocks, the fair value that I'll play will be like relative to their financials versus their price.
It's a hard one for me.
There's also people that play it like from a chart perspective or liquidity. What's your like fair value like strategy?
So what I noticed is a different mentor told me this, and I don't even know if it's fully a fair value gap, but this is what I counted as a fair value gap, or pretty much coming in and refilling a zone that was never touched. So, for example, I don't have it set on here on my computer, I have it set, but these candles right here are impulse candles, right? And at some point, the market, if it has refilled it already, needs to come and refill it. And when I say refill, it means it needs to come back down to this zone. So, for example, this zone hasn't been touched, or in the past it wasn't touched, now it has been. So, for example,
so it's kind of like
here in this area,
is it kind of like equilibrium type of feeling where it's
just
like
refilling?
it's like up so much that
he's come back and refill. And
probability
cool down.
would show that it's like would be more likely that a correction's in the near term. Like
yeah.
Like for the stock market, like it's like when the stock market reacted to the news with like the China tariffs, like boom, everything rocketed down.
Exactly.
It's like there's this equilibrium of sorts where it's the same thing like trading at market open. If we see a big dip or a huge spike, if we see a huge spike, I'm like, okay, let's go buy the inverse of the semiconductor market because it's about to probably correct. So is it kind of just looking at like overextensions?
Yeah, it's pretty much that. So for example, even over here, I mean, if you look at it for a quick second, I noticed that the market, if you look at, I use the RSI, so let me see if I can pull it up too. Maybe that might help me out with it, just briefly. So, and I don't have this one perfected or anything, like I said, I've been kind of testing to see if it's valid, like constantly. It seems to work in different situations. Now, if there's obviously like a news situation or whatever goes off, or let's say oil was the oil supply was cut off, or someone stole something, or something really important happened, I just disregard all of that. I disregard all the basic strategies I have here, and I kind of just wait for them to cool down, or let to see.
You know what we did one time when the market? It was right after the elections, and it was right after the shift in administration. So what happened to Tesla stock? Like I was up trading 24 hours that night.
Right.
And we were up to like 4 a.m. on a live session. And I remember like I adjusted the RSI to not be like, what is it, 3070 or on average? I adjusted it to like 80 or 90 and like 50 because it was so bullish that like every time the RSI would be overbought, it would just continue up. It just kept going. So we basically shifted the RSI to match the market and be like, it's such a bullish like next 12, or actually it ended up being like 3-week bull run. But it was like, it's so bullish right now that we changed our RSI to match the market sentiment. And sometimes I feel like you can still use, if there's crazy news or things are going bullish, you can still use the RSI. But you have to look at it and look at where it's swinging. Like here on the RSI, it's swinging on the RSI, but it's oscillating above at like 70. So I'll change the settings on the RSI to match market conditions.
What settings? How would you do that? If you don't mind me asking, that's something I haven't done yet.
I don't.
That would drastically probably make this easier for my strategy.
On TradingView, I think
the settings.
Yeah. So like here, they have 14. It says RSI length. I think you gotta, let's see. How I did it, is it 14 and 2? It's not 14 and 2. See how it says 70 and 30? So 70 is the top, right? And 30 is the bottom. So what you're looking for is that 70 and 30. Okay, upper band is at 70. So like basically, when we were like in a bull crazy market, see how it's like 90 is the top right there?
Yeah.
So I do like 85 and the bottom would be like 55.
Okay.
And
see how that adjusts.
And the band here would be like, what is between that, like 65?
Yeah.
And so then now I would watch RSI, and imagine in this environment, which I didn't like perfectly make it, I would have to like drop it even further.
Right.
But you see how the RSI in this area right now almost looks like, even though it's super hyper bullish,
Right.
it's now looking more consistent to play.
Yeah.
So that's how we'll trade when market sentiment's crazy in one direction, is I'll literally change the RSI.
Gosh. Okay.
Yeah, so that I can just look at it like that.
Well, I'll use that more often now because that makes more sense to me. And then the other thing I'm gonna say.
Is that helpful?
Yeah, no, actually it did. It helped me understand. It helped me understand how to kind of play with the strategy a bit more.
I've never seen it. I just do it.
No,
And
it
seems to
definitely, it
work.
definitely worked. So for this part, I kind of use that once in a while to kind of see how low it is, because I know some people, some traders are just obsessed with RSI or obsessed with certain indicators. They need it to even jump into a trade. So I just consider that as, as a person who's trying to either do better than them or just make it more of an efficient trade.
It would be more efficient for people if they, rather than only relied on the RSI, that they
Multiple things.
relied only, if there was like one thing, it was their plan. Like whether it's 2-to-1, like stop loss to take profit, or even if it's long term, how much they plan to invest. But like the plan is like, should actually be priority over all indicators.
Gotcha.
Usually. I mean, that's how I do it.
No, that's a consistent trader right there. So that's something I'm ready to become because I'm not there yet. So once I do, it's a whole different game changer.
So walk me through this. So you said, how did you play this?
So in short, for this trade right here, what I would be doing is I'd find a gap, aka just a big candle that has a big gap right here, right? And the goal is I was just trying to see if I can use this zone as a zone to jump into just a trade. And then the trade for me would be, let's say, wait for it to break out of this purple zone right here. And then my goal would be to just shoot for, if possible, which is why it's not always consistent, but one of these fat candles right here. So it's not always going to be a 3-to-4 or 2-to-1. It's just if I'm going to do a scalp trade for whatever the situation is, even though this is a 4-hour time frame, so this is a bit more than this is still a lot of fun. It's a lot of movement,
Right,
not
right.
much time. But if you're looking at the technical of what is this even called? This little bar thing I use, the Fib retracement. What is this called? What are these called? These little I don't know the term for it.
Dude, I just use rectangles, so I
use it once in a while just to kind
but
of
just know that the red is not an actual stop loss.
Yeah,
and,
it's just
and the
there.
green is not an actual take profit. So just because you draw it doesn't mean it will execute.
Yeah, it's just there for you to help, visually see a bit more where you want your stuff to be at.
Right.
But on average, what I like to do is I'll put my stop loss, for example, if I'm going to, it'd be below a decent amount of, maybe somewhere around this zone area. So for example, around here is where my stop loss would be. And like I said, I'm constantly adjusting, trying to figure out what's more convenient, what's more consistent. But the goal is I'm waiting for the sell pressure to stop and then for buy pressure to start. And then I jump into that. And then depending on the situation, I gotta get a little more technical too to see what makes sense, what's everyone liking. So for right now, what I'm seeing is, once again, I'm playing safe. It looks like the max zone temporarily for right now is about 34, almost 3,500, right? So I try to go a little bit underneath that by taking off, a whole
That's smart.
one. And
It's
just
smart
secure
because
the funds. if
just
not almost
because,
there.
like, if you set a plan, and I really appreciate you saying that, because there's been so many times where we set a plan and it's like just below that take profit is where it actually reaches. So like, it's okay to like go up short. It's called being conservative. Like, do it and then move your stop loss up. Like, if you get up on that and you're under this level,
here, just so if we get kicked out.
move the stop loss. Like, okay, so it hits your stop loss. All right, so you didn't lose money.
Right.
Like, you made money. So don't worry about it being exactly perfect to the top. Like, I think that's a really great point because
if I would have done that, it would have been way over here.
Yeah, you would have been
kicked out.
excited, and then it would have and you would have been up however much money, and then it would have corrected. So the best thing, rather than get greedy and just like hold it and be like, it's gonna make it all the way. Maybe it makes it all the way, but just move the stop loss up. Boom, do you lock it in?
Simple as that. That's how you secure that.
Yeah. And if it hits it and then it continues up, okay, you didn't have to take on that risk of buying it while it's overbought. So
And then one other thing I wanted to show with the like fair value gap. This is how I've been doing it, but I try to grab all of it before I actually start the trade, just so I can see what the possibilities are. So, for example, there's one from what I'm counting. Like I said, I'm still learning if it's a true fair value cap. But I'm just counting as a zone it needs to come back to. That's another way I put it. So this is a zone it needs to come back to and touch before it moves forward in whatever direction it wants to go in. So since that's the case, there's another zone right here, right? And since that's the case, I try to drag it all the way over in its possibilities. So potentially it could stop right here, which is it did. It stopped over at the zone, and then it decided to continue forward, and that's where you can make another trade, in my opinion, and how that could work.
yeah, I mean that's kind of just like you see a big oversell.
Bingo.
Like you see a big oversell and then it starts to recover, and it wasn't just because this is also a key thing. There's a previous support here. There's acting as a support that then acted as a resistance.
Yeah.
Sometimes people, they see it break above the support and they buy in and it goes up for a bit and starts to sell off and they panic and sell. First of all, like if you have a plan that shouldn't happen, have your stop right. But also like most times when you break into a new level, it does what's called a retest. So like right here, it shot up and then it did retest that zone one more time before continuing. And that will happen a lot. Like,
can you explain the reason for that? Because I've seen that and I've started to avoid them, or just not to get worried about them. But is there actual?
The reason for retests is institutions usually sweeping liquidity. Usually, if they're watching it very closely. If not, then it's most likely due to like nothing or just a psychological level from investors. But what will happen is if like most retail investors will buy where and then they put their stop, and what do they normally say? Set your entry where you would imagine most people put their stops. Yeah. So that's a perfect example. Like when you start to see it push up, you don't have to have FOMO. You can set a entry point near where you would put your stop had you entered right here. Yeah. So that's something that we do like pretty often if it's starting to change direction, but the sentiment isn't very strong. If the sentiment is very strong, there's really good news, and you can just see crazy volume, then retests don't happen as often. Like I guess right here it did happen. It like pushed up and then sold back down before continuing, but like sometimes. Like even right there is a swing. I don't know what time of day it was in the evening, but that's like a moment where it's just a V shape. There wasn't much of a retest, and so it's not something that always you play. And in fact, like again, like you can play it, but I look for it and it's something in my mind. But the number one thing I look for is like, how am I, does my entry feel like a good deal? And then also, how am I setting my take profits and my stop? So like, even if you were entering right here, you could get stopped out right there.
Yeah.
For sure. And that could happen. But what is more important is that when you enter, you're feeling like you're getting in at a good point. If it gets stopped out, That's part of the game. But most times, that's why I do like the 5-1 on the plan, because if you do 2-1 on the plan,
at least
it's almost like it's so conservative that I feel like it almost makes more sense to look for like no stop loss and just buy long term than to do a 2-1, because like a 2-1 you lose once. And now you have to win your next trade to get even.
Right.
But like when you do like a 5-1 profit, which is what I'll normally do, is I could lose like 3 times or 4 times and still like make it even. So I feel like it comes down to your risk management too. Like those things are important, and everything we talk about here is like good to look at. Yeah. But like I feel like the amount of risk you take on to how much profit you're looking for is going to be like
it's too even.
The fundamental play there. But I don't know, like I don't know what the market's going to do next. That's why I almost always go back to the fundamentals. You know what I mean?
Yeah.
Because that's the one thing that I can be like, in exact certainty, know that my plan will execute. You know, so like everything else, I don't.
I want to ask you too. What time frame are you using for a 5-to-1?
Usually
when you're getting into the actual trade.
Usually those are intraday. Usually those are intraday, 12 to 24 hour, somewhere in there. Anything outside of intraday, like a swing trade that's a couple weeks or couple months, I'm usually doing more like the margins. It will be a 5-to-1.
So,
but the margins of profit are so much greater that the stop is also much lower.
gotcha.
Does that make sense?
Yeah. So, are you also seeing the 5-minute time frame short doing those trades? So in the same day.
Yeah. So like
Okay.
5%. Let's say you're going for 5 or 10% on a V-shaped dip. And that's a really good question, actually. Shino asked a really good question. Like, that might be a couple cents on the share price or a couple dollars on Ethereum or something. I guess it'd be like a couple $100. If that is your margin that's on the short term, the ratio will be the same as a long-term trade, but because you're just going for a smaller margin for profit, your stop will be the same ratio of like 1 to 5, but
Right.
it will hit your stop it will have a greater chance of hitting your stop. The further out you go, a lot of times the less risk. That's what they say, right? So the further out you go, the less risk there is. If we want to trade Nvidia stock, we could buy it and probably with certainty say in 10 years it'll be a good investment. Like probably with certainty. Like very, 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 very high chance. But on the short term, you don't have that same certainty because institutions will fluctuate the market very quickly. And so that's why the only, like, the biggest things that lead to the trades, you want to know all the probabilities of like oversold, RSI, MACD, know the volume, look at the sentiment of the market. But then on top of that, the plan is what's going to put you there. So like the 1 to 5, same exact risk, but going for a smaller, not percentage of profit, same like percentage usually. No, actually different percentage. Smaller percentage of profit on a shorter term trade usually. And that means that there's going to be a tighter stop proportionally.
Gotcha.
I could pull up the calculator.
Yeah.
I have a calculator actually.
I also want to see an idea of how you can demonstrate that. So
yeah, let me show you here. So it's actually perfect that I can pull this up here. So I created a calculator that actually like plays this out here. So let's go to one of our recent videos. Pretty sure if we click on this video here, let's see, and we go, that's the profit system, let's see. Let's try ND. I can't see like the descriptions of my videos because I'm not signed in. So I'm kind of like guessing which one has my calculator. But some of my videos I offer, oh, let's see, there's a video on it. Trade profit calculator, right there. Trade profit calculator is right here. Here we go. So this video explains it and I can totally link it. But basically, we'll get the calculator. You guys can email me there. I'm gonna have to put that number. But so basically, like imagine it doesn't matter what it is, but let's say you're buying a stock or something for like 5,000, or let's say Ethereum. I don't know, that's a great price.
Right.
And you're looking That's your purchase. That's your purchase price,
Okay.
and I don't know. The current price is at like, let's call it like 50-50.
Okay.
And number of shares. I don't know. Let's say you got like 1 Ethereum. So basically, how this works is like it doesn't matter if it's short term or long term. You can set, and it will proportionally show how much you're going for. So let's say you're going for a 10% margin for profit.
Okay.
So a 10% margin for profit would be like a 2% stop.
I
So
see.
that's how I play it. So that would be like a $500 potential profit, and then 2% stop would mean that's 4,900. So basically, what does that mean? That means you could lose 100, but you're going for 497. Does that make sense?
Yeah.
So like even
it's more clear too.
right, and even if it's a short-term trade, it's funny. Like I literally developed this and like was able to make it, but I couldn't like explain it that simply, which I'll get better at. But like let's say you're going for that like 2% trade.
It's not much. It's not even worth it, honestly.
Well, here, just look how easily you could get your stop loss hit. Just 0.4%. So it's not that it's not bad, but the smaller margins for profit that you go for, the tighter the stop will be if you're going to manage your risk.
You know what? I think you might have just helped fix a lot of my problems with that, because it came down to like you said earlier, stop loss, risk management is insanely important. It's insanely important. And that's the biggest thing I've been trying to figure out. I got better at it at the end of last year, but I still haven't had haven't had it sharp. And this right here, this makes it so much easier. I'm happy you showed this.
Yeah, because you know
I did not see this.
You know what people do, like, and I used to do this, is like you're going for, let's say, a 2% trade, and people will set their stop loss at like 2% or 4%. I don't know. And it's like you're looking at the levels and margin profits aren't mapping up. So like a lot of times, if it's 2%, I won't even take the trade. It kind of forces you to be like, I'm going to set my stop loss so close, it's probably not going to be a good trade, right?
Yeah.
So that's why you look for bigger opportunities. You look for, let's say, you know, let's call it a 15% margin for profit. I can manage 3%.
Right.
Okay, so I'll lose if it goes that way. I will lose $150, but I'm going for 750. So I can take that over and over, and I'm like, you know, I'll lose, sure, that's fine. And I might even lose more than I win, and that's fine because of the way that we manage our risk.
Because all it takes is just one.
That's all it takes.
Okay.
Exactly. Now, one thing that's also true about that is it might take one, and sometimes every once in a while you go for a 17% trade. What happens? You lose it and you say, oh, I'm losing so much. One of the issues is traders should always try and go for the same sized opportunities every time. Because imagine, I'm going for 2%, and I'm like, I won 5 in a row. Okay, so I made 10%. And then I'm like, I'm gonna go for 15% now. And then I lose 1 and I lost everything. It's because I wasn't keeping my goals consistent. So not only do you have to have a plan consistent, but really you should have like the targets that you're going for consistent as well. So I'll always go for like 15 to 20%, like almost always on the shorter term and like midterm trades. And sometimes it goes up and I'll lock in profits early. That doesn't hurt you to do that, to lock in profits early. It's the losses that will.
When it comes to early, do you have a percentage range? Do you kind of like to have it set at that is hit, or you kind of just play it safe depending on what the situation is? If you
Once I'm in the profit and in the green, 2 things. Number 1, I do get emotional sometimes, and I'm like, I don't want to lose money, and I just lock it in. And honestly, that's fine. But also, there's this thing in my mind that I read from, it's like Trading in the Zone. It's a book that I read one time where the guy's saying like most people let their losers ride and cut their winners short.
Yeah.
So like whenever I feel that, I'm like, I'll move my stop, but I'll be like, it's okay if I move my stop literally up to 0, and that means just I make 0 if it hits my stop,
Right.
and I'm not gonna aggressively move my stop loss up unless I'm up a lot.
Right.
But otherwise, I'm like, let's try and let it ride
Yeah.
to the targets we're going for. Yeah.
Makes sense. Okay.
So it's a balance, right, between those two things.
Yeah. You just gave me some. I'm gonna try that. I'm gonna try that with the back testing. That's my goal today. I'm gonna do a bunch of back testing on a few different things. But you have to narrow it down to where I can stay consistent at that point and see what happens, and then go from there. Let's see. Yeah.
Cool.
Appreciate that. Seriously.
Yeah,
Appreciate that. Perfect.
I'm glad it's helpful. You have to get your hands on that calculator too.
Yeah, that's what I was gonna do when I get home. I'm gonna do that because that right there has been. I've always been like you were saying earlier, just putting my stop loss in the air. I feel like it's convenient, but that kind of teaches you on like if it's even a good trade or not.
Yeah.
The minute you do that every single time, you keep consistent and don't move it around constantly and stay to the plan. You'll know. It's extra confirmation that this makes sense or doesn't make sense.
Totally. Have you been to like the casino before?
Yeah.
So
So a friend of mine, long story, but in short, she walked in with 6,000, lost 6,000, and then on the same day got all 6,000 back. And that told me, in summary, never go to the casino. But
well, I've been to the casino and I do go every once in a while, and you know, like the only game that I'll play is blackjack.
Yeah.
Because blackjack is the same here, and it's the only game that they will tell you to leave if you're winning. Because it's the only game that you can use probabilities in your favor to actually win.
And you're counting?
Yeah, exactly. So like counting cards means like basically you're managing your risk proportionally to what is stacked in the deck. And math says that if you were to play blackjack forever, or like let's say you had 1,000 hands and you do manage risk proportionally to what the deck's looking like right now, you will be a profitable blackjack player.
That's funny.
And so that,
but they don't want you to win.
They will kick you out. I've gotten people watching me before, and so you gotta be.
How do you do it smart is the question. You want to do
What?
go in there and be able to walk out and everyone noticing. I mean, what, only like a few turns or?
Usually, like, I'll go with. I don't go very often. I've been like once a year probably, but when I do go, I'll go with friends, and I'll do like some of it, and then I'll also have my friend do it, and I'll like tell my friend, and I'll be like, I'll be like, you're like +4 right now, so like be careful, like it's
just be careful.
Yeah, or I actually haven't looked at it in a while, but basically you it's the same. You can count cards. We could talk about it, but basically like the more jacks and kings and tens and queens that they put down, the lower the chances of blackjack. So you basically change your count based on those cards, and if they're low cards that get put out, that increases your chances of getting blackjack, because those are like the cards that bust you. So
that makes sense.
That's kind of how it works, and you just like basically you have a probability meter where you just like, oh, I get it. I have like a +5, like really good chance of winning right now. I'm gonna tell them like, yo, your odds are in such good favor, and they'll bet proportionally to like what that looks like for their bankroll.
So I assume you gotta like make yourself lose a few times so you don't look suspicious.
No, I don't. No, I usually because dude, like they have tons of people, and probably like 1 out of every 100 like legitimately are counting.
Gotcha.
It's not as like
it's not common.
Yeah, and if they do, they probably only get upset once you start like rolling with like a lot of cash. So if you go and get a couple $1,000 and they don't care.
But with the few 100,000, that's a different thing. Like, oh, okay, he's actually he's like, hey, that makes sense.
But I don't promote gambling at all. Like I actually don't like while it's good, that's the other thing is like what influences do you have to go through on your way walking to the blackjack? You gotta walk past the slots, you gotta walk past all this stuff that's totally written against you. So don't even do that.
Yeah, that's not a good habit.
But with that being said, guys, Chino here. If you guys want to get your car wrapped too, do you guys want to see what my car looks like so far? Should we show him real quick?
Yeah.
Let's do it. So Shino wrapped my car, and I was dropping the car off, and we went to it was like Whole Foods where I was getting picked up after that. And what did we do? We were talking about like trading the whole time.
Yeah, pretty much.
And what happened was Shino was like, we started talking, and then after that, he was like, dude, I want to join Stockmate. So boom. It's a little bit dirty, but let's take a look. Here, you want to lift it up? So this is Shino's wrap.
The process so far, it's almost finished.
Ooh.
You guys gotta remember, it was very it needed a lot of sanding.
Oh man, this thing was like not. But yesterday I had somebody I was talking to because they were like looking at it at the gym the other day, and they asked me like where I got it painted, and I was like, no, I'm like, it's wrapped. Yeah, so this thing is beautiful, and if you want to get your car wrapped and you're in the San Diego or Sacramento area,
Yep.
Shino will set you up with a sweet wrap, and it will be the premium quality you're looking for to get all the looks from everybody, or just protect your car, feel good, have a nice wrap. And on top of that, it's a super, super economical way to make your car look beautiful. So I would encourage you guys, check out Shino. I'll leave a link for him.
Perfect. Yeah, reach out to me, guys, whenever you need it. I can take care of your car wraps, your needs, window tinting, PPF, all the above, even ceramic coatings. I know paint's very expensive nowadays, so what I've been doing is I've tried to make it more affordable for everyone else, so they can actually get a good wrap job and have a clean result and have it last for a decent amount of years. So
boom,
definitely hit me up. Let me know whatever you guys need, and let's get to it.
Take your trading profits, go get your car wrapped. Talk to Shino.
Yes, sir.
All right, guys. Hey, thanks for watching. Appreciate Shino being here. And if you guys have any questions, things like that, leave a link down below. Also, Stockmate. How have you found that it's been for you?
It's given me a lot of better advice to get rid of the noise, if that makes sense. So it definitely helps you be more of a profitable trader.
Be more simple in your approach.
It simplifies everything to make it more consistent. Consistency is going to be the key for anything in life, especially thank you, especially trading. If you're not consistent in everything you do, at the end of the day, it's gonna be very hard to make consistent funds. That's just the bottom line. So it's a lifestyle, it's a game change, it changes everything about you. So
I love that.
It's worth it.
Hey, I appreciate that. And I hope that everything that we do to innovate and stuff makes it even easier for you, and that like we're like always improving. So if you guys ever want to join, feel free to take a look. I mean, you heard it from Shino. It's up to you though. It's the second link in the description. And then outside of that, if you guys enjoyed the video, earned your thumbs up, hit the like button, do consider subscribing, and we'll see you guys in the next video. Take care.